Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the market site in Times Square, we have JJ Kinahan. He's the Chief Market Strategist over at TD Ameritrade. We're going to take a look at how retail investors are approaching the market. And JJ, some encouraging move on the Investor Movement Index hits its second highest reading of the year.
It does. And, the theme of the year, as you and I have talked before, Jill, has been caution. I still think it's a pretty cautious reading if you look historically, but what is sort of encouraging is people are getting away a little bit from this just pure low volatility stocks, starting to spread their wings a little bit more. With that, we continue to see also fixed income, the duration, staying short, 6 months or less. What does that tell me? There's demand for stocks that continues, maybe not as high at these levels, but if we get any type of sell-off that people are there, I think the breaking through 3,000 so convincingly these last few days has really been quite a surprise for many people.
All right, and they're staying invested. Even if they're not in stocks, they're staying in fixed income, which is so encouraging.
Right, and again, I think the shorter duration is encouraging to me. They want that money safe and they want it ready to move if they see opportunity come up ahead of them. So overall, this is a very good sign for the market.
All right, let's talk about overall net buys. What were TD clients buying this month?
Well, it's interesting. Disney continues to be a stock 5 months in a row that our clients want to buy. AT&T, so maybe there's a little bit of the streaming wars being sort of voted on right there with stocks that they're buying. We saw AbbVie continuing for a few months in a row now to be a buy. So those are some of the bigger ones that our clients are interested in. And like I said, Disney has been one that has just been a hometown favorite, so to speak, most of the year. And it's really interesting to me because on the sell side, Netflix was one of our sells. So that's why I wanted to reference. I don't know for sure that it's due to the streaming wars, but I do find it very, very interesting that you're starting to see that. And AT&T, one of the reasons that they're so attractive, blue chip, streaming, great dividend.
Yep. All right. Now let's talk about those net sells. We know Netflix is one of them, but a couple of the others that have hit all-time highs.
Apple being one of those, and we continue to see Apple, which has been a sell almost every month this year so far, Jill, 7 months in a row. I don't think it's necessarily as much a comment on Apple negatively as the fact that it's hitting all-time highs. Our clients do tend to use it perhaps as a synthetic play on tariffs because they believe a lot of Apple suppliers. I was at a conference this weekend, and it was really interesting in just the anecdotal conversations, hearing our clients talk about the fact that they may be long Apple. They don't want to be as long Apple as they once were because of that. And Facebook, and we all know once you're in the government crosshairs, that becomes a little bit of a difficult place to get out of for a while. And so there continues to be concern around that.
All right, now millennials, they are still trading around the cannabis stocks.
And again, I think often when I talk about this, people are like, why would they buy those cannabis stocks? They've been so terrible. And what I would say is, it depends on your time frame. If your time frame is a long time frame, I find it very hard to believe that 20 years from now cannabis won't be legal nationwide. It's going state by state right now. The progress has been pretty good. If you're telling me that you're going to buy them for a 3-month play, I might say, yeah, you might want to really think long and deep about that. If you're telling me this is something I believe in long term, and I believe the prospects for cannabis in all areas are great in 10 years or 20 years, and again, think about how old the people are that are investing this too. I think sometimes people in their 50s and 60s say, why would you do that? And then it's like, okay, let's back up, because people in their 50s and 60s and the early 80s are like, why are they buying technology? That makes no sense. So again, this generation sees some things in the future that they're believers in. So a long-term play, again, I do think it's something that makes sense. And by the way, very affordable prices on a lot of them.
Well, that's very true. But it's a great point that you bring in time frame in terms of context here.
Absolutely.
Because you know about this, you see it on TV, you see it in your Twitter feed and so forth, where someone has a great call or they don't. What I might think is a great call might not be for you long term, and vice versa. So understanding what your time frame in is just as key as understanding the fundamentals behind the stock.
Jill, it's so true, and it's probably one of the bigger mistakes people make is that they don't consider time frame in their investment thesis. And it's very important that you do. And if the things don't go well in the time frame you pick, that doesn't necessarily mean go from trading a stock to being an investor in the stock.
And that's very true. And I cannot believe we're saying this. Speaking of time frame, with only 2 months to go left in the year,
It's crazy,
What
and
are you thinking?
yeah, I'm thinking, again, the consumer's been very healthy. We're about to start retail earnings. I think that bad news there will be an individual name story. Overall, I do think it will continue to be really, really healthy. We're seeing how good the consumer is in jobs reports. You got banks, Jamie Dimon kicked off earnings talking about this. We continue to see that theme. No reason to think it's going to stop for the rest of the year. I am a little cautious as we head into 2020 about when the credit card bills hit, as we know people tend to overspend, and as long as the employment machine that we have continues, that's great. If employment slows down, I start to get a little bit concerned about the consumer. But for the rest of 2019, as you said, we only got a couple of months left. I would expect this to be very, very healthy.
I mean, even if you took the U.S.-China trade deal out of it, we're firing on all cylinders for the most part. Can you imagine where the market would be if we did not have that in there?
Well, I agreed, and what really makes me a little bit nervous about the trade deal is the fact that we're not hearing companies talk about spending on infrastructure in their earnings calls, and that is something that, this will be quarter 4 basically, where we really haven't heard much about that. That is something that does frighten me 18 to 24 months out.
Yeah, because that's what investing in your CapEx is what gets you to future growth. We're not seeing that.
That's the primary reason. Let's settle it. I mean, really, the market needs this settled, good, bad, or once they know what the rules are, they play the game really well. But this no rules game that we're in right now, what's the best thing to do if you're a CEO? And you can't blame the CEO. Say, we're not going to spend on this money until we know the answer. Let's either give back, more on a dividend, stock buyback, whatever it may be, because in this environment that we're in, that is a better use for many companies of that money.
All right, as always, thank you so much for joining us.
Thank you, Jill. Great to be here.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.